Hello students, welcome back to the virtual classes. So today we are taking up with the fifth unit, that is review and reporting. Okay, so in this chapter first the concept is subsequent event. So you have to understand what is subsequent event is. Okay, see, subsequent event is an event that occur after reporting period but before the financial statement for that period has been issued or about to be issued, depending on the situation. Such event may or may not require um, disclosures in an organizational financial statement. So such event is termed as a subsequent event. So here the event which has been occurred after a reporting period or before the financial statement for that period has been issued, such event, depending upon the situation, such event will be termed as a subsequent event, and which is may or may not require a disclosure in an organizational financial statements. So such events we are terming as a subsequent events. See, there are two types of subsequent events. The first one is additional information. um, it means an event provides additional information about the condition in existence of balance sheet date, including estimates used to prepare the financial statements for that period. That is additional information. Next, we have a new event. An event provides new information about conditions that did not exist as of the balance sheet date. Such event is termed as a new event. Additional event is for the already existing event. Additional information has been provided, that is additional information. New event is which is the event provides new information about the condition and that does not exist in the balance sheet date, and that is termed as a new event. So here subsequent event for reporting purpose are defined as event which occurs subsequently to this. Okay, the first one is date, balance sheet date, the date of the auditor's report, balance sheet date but prior to date of the auditor's report, and date of the auditor's report, and concern contingencies which are not reflected in the financial statement. All this, if an event is occurring in this period or in this dates, that is termed as a subsequent event. Okay, well, we'll move on to the next concept, that is indicators and responsibilities and procedures to be undertaken with respect to subsequent event. So here we are discussing about the procedure which will help the auditor in identifying the subsequent event that require either adjustment or disclosures in the financial statement. The first one is reviewing existing procedure laid down by the management to identify these events. Okay, so here they have to review the existing procedures so that they'll get to know if there is any subsequent event with respect to that particular uh, item. Okay, then we have steady minutes of meetings of the members, board of directors and other important executive committees. Okay, so if they are studying all these things, they'll get to know if there is any subsequent event associated with this or not. Then discussion with the key officials on matters such as the company's policies on marketing of new product, price structure, major sales order booked or cancellation of sales, and loss of major customers if any. Okay, new borrowing, capital commitments, fresh guarantees, outcoming of pending lawsuits, and any changes in accounting policies, etc., will lead to occurrence of a subsequent event. Then ascertaining the status of litigations, claims, etc., against the company from its legal advisors. Then inquiry or extended provision, oral or written inquiries of the entity's legal counsel concerning litigations and claims. So these are all the indicators of subsequent event. We have few more indicators. Okay, that includes the following. So here reading the entity's latest available budget, cash flow, forecast and other related management reports for a period after the date of financial statement. Then obtaining written representation from the management that all relevant event have been appropriately accounted or dealt with. Okay, then obtaining an assurance from management about the current status of items that were accounted for on the basis of estimates or inconclusive dates. Any events occurred or likely to occur which will require changes in the existing accounting policies. Okay, then any event which may cast doubts about the validity of entities going concern consumption. See, about going concern consumption, we are learning in detail in the next part of the in the next class. Okay. Okay, for this purpose, the auditor should remain alert for circumstances which may cast significant doubt on the company's stability to continue as a going concern. Okay, so here these are all the indicators of subsequent events. Then we have management responsibilities towards preparing a financial statement in accordance with the relevant financial reporting framework. Okay, IAS 10 events after the reporting period requires management to consider the impact of event that occur after the year end on the financial categorize those event as. Okay, so here the event which has been occurred after the year end, that has been categorized into two categories. First one is adjusting events and non-adjusting events. So adjusting event which provide evidence of conditions that exist at the year end and therefore should be considered in the transaction balance and disclosure of a financial statement. Non-adjusting event which occur conditions that arise after year end and are therefore relevant to the following period financial statement. Okay, so if serious thought they could have a material impact on the business, this may need to be disclosed in the financial statement. So this is about management responsibilities with respect to adjusting events and non-adjusting event. Then we have auditor's responsibility. So ISA 560 subsequent event details the responsibilities of auditor with respect to subsequent event and procedure they can use. It identified two period of relevance. Okay, the first one is up to the date of auditor's report. Second one is between the date of the auditor report and publishing the account. The first one is up to the date of audit report. Until this point, the auditor must perform procedures to identify events that need to be either adjusted or disclosed in the financial statement. Okay, then when it comes to second one, here during this period the auditor need to perform procedures, but if they identify any adjustment or disclosure that need to be made in the financial statement, they must take appropriate action. That is auditor's responsibility with respect to up to the date of audit report, between the date of audit report and publishing the account. Then we have procedure performed in subsequent event review. Okay, so which includes the following. Okay, the first one is inquire into management's procedure system for the identification of subsequent event. Inspection of minutes of members directors meetings, which I have discussed earlier, right? Reviewing accounting records, including budget, forecast, and interim information. Inquiring of directors if they are aware of any subsequent event that require reflections in the year-end account. Okay, obtaining from management a letter of representation that all subsequent event have been considered in the preparation of financial statement. This is very important. Okay, then inspection of correspondence with the legal advisor, inquiry of progress with regard to reported provisions and contingencies, normal post reporting period work performed in order to verify year end balances, then checking after the date receipts from receivables, inspecting the cash book for payment receipts that were not occurred for at the year end, then checking the sale price of investors. All this has to be reviewed again and again to check if there is any subsequent event exist with respect to that particular thing. It may be a sales, the cash book, or minutes of meeting. Okay, so all this will be examined to know about the existence of subsequent event. Then we have, okay, so this is all with respect to the today's class. Okay, thank you for watching a video. Have a great day.